We're going to be reacting to the 5 proven ways to double your money. So taking $100 and turning it into $200 with any level of consistency is a recipe for wealth. If you want to double your money, you don't have to get lucky in Vegas or win the lottery. There are better, more consistent, and proven ways to boost your bank account by 100%. Here are 5 ways to double your money. Number 1, 401k match. If your employer offers a match for your 401k contributions, this can be the easiest and most guaranteed way to double your money. 401k matches may be a dollar for dollar match up to a certain percentage of your salary. So it's literally doubling your money. Even if your employer only offers a 50% match, it's one of the best returns on investment you'll ever get. The only caveat is that your 401k is designated for retirement. As such, there can be steep penalties for withdrawing before you reach retirement age. So if you need to double your money and get access to it quickly, the 401k isn't your best option, but it is basically one of the most for sure ways to actually double your money. Like this thing alone, to those that listen and watch this thing alone can literally make you a millionaire, okay? Due to what is known as compound interest. Number 2, savings bonds. Another guaranteed way to double your money is by buying Series EE savings bonds from the US Treasury. While the bonds currently yield a paltry 0.10%, EE savings bonds have a special mechanism that guarantees you double your money if you hold them for at least 20 years. After 20 years, the bonds will continue to earn interest for another 10 years. An additional benefit of using EE bonds is that they're exempt from state and local taxes, but sadly you still have to pay federal income tax on the interest earned. Number 3, invest in real estate. So investing in real estate offers multiple ways of doubling your money. The big advantage of investing in real estate is the easy access to low interest leverage through mortgage or other real estate loans. That means your cash investment can be relatively small compared to the asset value. Now, you might be able to double your money by forcing appreciation in a building through repairs and renovations. Then you can turn around and sell it. Now, if you live in the building for 2 years while fixing it up, you can also avoid a lot of taxes. And also, if you end up living inside the residence, you're basically I believe up to $500,000 of profit or basically appreciation you could actually get tax free. So if you were to basically, let's say, buy a house for $100,000 and it increases to $600,000, you could actually sell it for you could sell for $600,000 but take a $500,000 profit tax free. You could also double your money by finding a solid rental property and holding it long term. Not only could you generate monthly cash flow, you'd also benefit from any appreciation of your real estate asset. And another way to do this is, let's say that you buy a house and you rent out every single room, obviously to your roommates, where you could then collect rental income every single month, potentially not even having to pay your own mortgage completely at all. And you could potentially actually bring in double the amount of your mortgage. Number 4, start a business. So investing in yourself can be one of the best ways to double your money. Starting a business doesn't have to take a lot of money. You can actually get started with less than $100 if you need to. The business doesn't have to be big either. It could be just a side hustle you do in your free time to supplement your income. And you don't have to reinvent the wheel or even come up with an idea at all. You could be a rideshare driver. You could spend $50 on gas and get $100 back in your account. So starting your own business can also have tax advantages, but you may need to consult an accountant to ensure you're taking advantage of everything you're allowed to. And the thing to really understand about this, right, these tax advantages, this is where you see all those sayings like screw the rich, all that kind of stuff, right? Oh, why is the rich not able to pay taxes? Or why are they not paying taxes? This is the reason. It's the tax advantages. Because when you have a business, you could write off way more than you could as an individual, and in turn, saving you a lot of money in taxes. And number 5, let compound interest work its magic. So compound interest will always double your money given enough time. The challenge right now is finding the proper vehicle for compounding your money. Savings accounts yield practically nothing, and CDs aren't much better, and investing in securities historically produces much better returns over time than steady interest-bearing accounts, with the disadvantage of increased volatility. Now, if you want to figure out how long it'll take to double your money, you can use the rule of 72. It's a simple trick that estimates the length of time to double by dividing 72 by your interest rate. So, for example, earning 9% interest year after year will double your money in 72 divided by 9 equals 8 years, right? Which is why putting your money, like your 401k or your Roth IRA, into an investment, whether it be mutual funds or an index fund that follows the S&P 500 that kind of averages about between 8 to 12% per year, basically means that you could pretty much get this to potentially double every 7 years, your money. So mix and match. Each of the above options have varying benefits, drawbacks, and risk. You don't have to choose one. You can choose all or some of them in order to plot your path forward and double your money. Yeah, so either way, this is a very good breakdown, a very good top 5 list. Because here's the thing, right? A lot of people kind of overcomplicate doubling your money. And they're thinking oh, I need to go do this to get rich super quick, right? But the interesting thing about personal finance is that typically there are 2 ways to double your money. You either make more money or you spend less money, right? And a third way is by having your money make more money, as in the whole compounding interest thing, right? Because once you understand that you could put your money and set it to where it's basically producing seeds for future trees, and it's just going to keep on doing that forever and ever and ever, you start to realize that as long as you continue to increase your income and funnel as much money as you can towards your investments that have this compounding interest nature, then you know that this money can pretty much exponentially increase to the point that your investments will actually earn you more money per year than whatever it is that you're actually doing to make money, as in a job or a business. Just imagine that. Let's say that you're working a job, and after taxes, you bring in $50,000 a year, right? Depending on how you invest your money, and if you do it correctly and soon enough, right? And you keep your expenses low and you funnel as much money as you can towards your investments, right? You could actually get to the point in not too long of a time where your investments, the return on that every single year could potentially actually be more than what you actually bring from your job. Just imagine that for a second. Truly imagine if you could get yourself into a position where you could actually make more money doing literally nothing, right? And that's where you really need to get yourself to. And the best way to start the steps to that is to get out of debt, because debt is one of the worst things for you when it comes to your finances. So learn how to get out of debt at 4dunbox.com. And we'll see you in future episodes. Stay tuned for more, subscribe, and hit the like button.